Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb. Today, I am absolutely delighted to have been introduced recently to Neil Arora. Neil is over at BondXN, and we've been talking beforehand about the fixed income markets, his 30 years worth of experience. We've got a very, very interesting conversation coming your way today. But with no further ado, Neil, let me ask you to introduce yourself and tell us a little bit about the business.
First of all, Toby, thank you for inviting me. I've been in this fixed income space for last 30 years, in fintech effectively 40 years. So since I started my professional career, it's always been working for the big financial institutions in the New York tri-state area.
And it wasn't even called fintech in those days, was it? It was just good old-fashioned financial technology.
And I've been in this fixed income space for the last 30 years. I worked for some of the largest financial institutions, and this BondXN is my third venture. I built my first company, which was a position keeping and risk management system that I built in the late 1990s. That got acquired by Ion Trading back in 2005, and then subsequently I started a second venture in 2011, and this 2018 is my third venture, which is BondXN. So I've been in the space for 30 years. It is good to stay in an area that you know, that you feel safe in, and this is my area of fixed income. And I did all the different areas of fixed income, U.S. Treasuries and corporates and even derivatives and so on. But the mortgage space is where I spent the last 15 years. So very passionate about the space, and I think we have built a great system here.
Absolutely, in the mortgage space. So a three-time entrepreneur then?
Yeah, yes. I mean, and there are a couple that I might not have done very well. I tried my hand at education at one point, so I will not talk about that. But yes, this is my
come back to where you know.
Yes, precisely.
And that must have been one of the early Ion acquisitions at that stage as well, was it?
It was, I think, their second or third acquisition back in 2005. So yes,
they've had a few since then.
Yes. Yes, it has grown a lot since then. So,
well, look, everyone gets set on their way. You obviously started that for them.
Yes. So I know that team very well.
Very good, very good. So this business started in 2018, I believe. Is that right?
Yes.
Tell me about the journey and how you've been tracking so far.
So a previous company that I had started back in 2011 was also in the mortgage space. I was helping the big financial institutions here, not the sell side firm, the big banks, manage information internally. So in our mortgage space, data is key, and having historical information about where things have been priced and who has expressed an interest in a bond, who was selling it, who was holding it, who was buying it. Having historical information and having historical pricing information is very, very important, because it's a very illiquid market. In a market where you have over 1.5 million securities out there, you can imagine that just knowing where a specific bond had traded back, even 6 months ago is key. So our system that we had built was to help dealers track all the market information and client information. And while we were building the system, one of the helping a client become efficient with their internal workflow and data management is what our software was doing. Recognized that the biggest efficiency or the inefficiency was when people were communicating, when the market participants were communicating with each other. So people were, dealers send information to their clients using Excel spreadsheets. They get responses over ID chat, and the whole trading and how things are being executed and how just information is being shared is done, bilaterally between two counterparties. There's no standardized communication or protocol, and everybody is working on partial information. And the whole that's where the biggest inefficiency is in the market space. So decided to solve that problem, and that's how BondXN was created.
I love that. And when you were there and looking at that in previous companies, that sort of glaring inefficiency sort of nagged away at you. I love the sort of entrepreneur's mindset of seeing something and went through it. So how did that sort of idea evolve that there's the inefficiency, this is how we solve it? You've obviously got 30 years within the space. We're not talking multi-asset fixed incomes very much your sort of world. Tell us what sort of prompted you to say this is how I'm going to fix this.
Yeah, so the first part was the confusing part was why other, there are some other established electronic trading platforms out there. Why
Mm,
were they not entering this space? Why were they not succeeding in this space? And
mm,
then having studied the problem a little bit more, recognize that this DNA that you need to solve our problem is different from what traditional e-trading platforms do. The traditional e-trading platforms are great at performance and execution speed. And it's a very liquid market. So knowing as the market moves that you can click on it, knowing the depth of the market effectively, and click to trade is instantaneously. With you can decide which dealer you want to trade with. But the in a liquid market, the concentration of securities is in 100,000 securities, and you can clearly see where the market should be getting priced and where the prices are. In our space, the problem was that there are over, as I said, over a million securities, and just to be able to share enough information, nobody recognizes a QSIP or a bond name. You have to share some attributes about the security that you're trying to sell or trying to buy, and people need to then figure out how similar bonds have traded, and that's how the price discovery is done by looking at how that story is trading. And once you've established or figured out the price, since the bid ask spreads are very wide in our market or relative to, say, US Treasuries, there's a little bit of negotiation that goes on. There's an offer and then you bid and you somehow meet in the middle and do the trade. So that complexity of the market is what kept some of the traditional players to get into the space. And we needed to come up with a new paradigm to, first of all, share information, to standardize the information so that people can then look at everybody's offerings in, say, a centralized place or whatever is being traded, and then being able to do the negotiations. So that was a unique problem that our market has. And that's why we got involved, because we knew the space and we felt we had the best solution for it.
I think this is a really interesting part for me because it feels like the electronification of the markets is been something which has been a story which we've been speaking about for a few years, a few years at least, to say the very least at the moment. Um, and this feels like to me one of those last bastions, those last houses of areas where that still needs to become modernized, etc. And people sort of sit there and hold back on various different areas. This has been an area where they've held back. Sometimes my questioning around that and when you're speaking, you're a successful three-time founder, right? There's a lot of people who come in there and create things particularly as a first-time technology orientated founder, where they're solving problems that don't necessarily need to be solved. It's just interesting technology challenges. To me, this involves both of those things of an interesting technology challenge to be able to look at, but also an archaic area of the marketplace that has real value when you're solving it. Tell us how those two are fusing and why you know that you're solving a problem that needs to be solved, as opposed to finding technology a home to play with, etc.
Yeah, no,
Does that make sense?
no, Toby, you're absolutely right. There are people who build a great technology and then try and find a problem that
Problem. Yeah.
that's not the way I operate or my team operates. We look, we see a problem and then decide that, okay, this are we the right people to, first of all, to solve this problem, and then if we are, why, and then obviously to devise the right solution. So we approach the problem based on an actual need that we perceive in the market and a problem that needs to be solved, and also being very honest with ourselves, are we the best people to solve this problem?
Mm.
So I think that also that fit has to be there. Our clients, we need to have the domain knowledge, plus we need to know the players in the space, right? So this product that we have built with BondXN, we built it with multiple partners who are already who are in the space, and so we built it with our client base. So we built it with our beta clients, It's only now that we have started pushing it and marketing it to some extent, because we think the timing is correct now. The timing is right for adoption and more wider adoption. But we have built a solid product, so that's what's you do it patiently, you do it in steps, and then we are ready. You go out.
Yeah, there's a lot of people who are already just wanting to push things out as quick as possible, but I think that sort of patience and timing's everything. Tell me, why is it the right time now?
First of all, we have reached that inflection point where we have enough. So when you digitize a space, you need enough players, you need enough sell side firms, the big banks and the dealers, and you need enough buy side players also to be engaged, so that you have people who use the network to connect with each other and trade. So we announced a partnership with BlackRock's Aladdin system.
I
That's
saw that.
so BlackRock, the Aladdin system is one of the most popular order management systems used out there, an execution system. So we integrated BondXN with that platform, so orders can originate from that platform and get executed on our platform. So that partnership is suddenly opened the door to some of the largest buy-side institutions that are out there. And with that announcement, now everybody wants to hear about us. We're already getting, reverse inquiries and stuff. So now is the time to let everybody know that, look, guys, this is here. We are integrated with one of the largest buy-side platforms out there. And now to gain the momentum and get both more buy-side and more dealers on the platform, so that it becomes a more efficient platform effectively for the whole market.
So we were saying off camera that sort of link up with Aladdin is high praise when BlackRock are there and sort of validating everything you've been talking about.
Okay.
That's not a bad step, is it?
No, it is. They kick the tires on and they look at the platform. They are very astute when it comes to their decision making in terms of what adds value. Uh, there's some buy side clients that have almost mandated that if there's an electronic solution out there, they should use that.
Mm.
Doing stuff over phones and over IBs, they try and they want to go electronic wherever possible. It reduces operational risk. There's an audit trail. There's more control in how it reduces the risk for the firm, and if possible, you do it. So that whole push from the buy side, I think the buy side is driving it to go electronic wherever possible
Yeah.
into products. So that's the big push, and I think that mandate by some of the large buy-side firms has helped, electronify even these last areas which are complicated to electronify, but there's a push to even do it here.
Yeah, I totally agree, and I think the buy side has been the sort of petrol on the bonfire of a lot of innovation. I think in the technology space, financial technology space over recent years. I had someone on the show last week where we were talking about an event which they came to with me, probably best part of a decade ago, and the CTO of a major buy-side firm asked me to get a bunch of technology startups in to show new technology to a room of 20 buy-side leaders at that stage. So I managed to scramble a few together. But I remember being sort of 10 years ago even, and thinking the buy side has got so little innovation in terms of technology. Fast forward a decade, and there's an absolute swathe of really good things that are happening. It feels like it's caught up, and it feels like this sort of thing which you're talking about, seeing real problems, seeing the opportunities in it, plus this perfect storm of interesting technology, and we'll come on to this in a second, sort of creates a real platform to take the buy side and really move it further forward at a time there where they're looking for alpha and like never before, looking to increase productivity probably again like never before. It creates a really perfect playing field for what you're looking to do, right?
Yes. So there, like I would say 10, 20 years ago, the technology innovation resided with the sell side to a large
Yeah,
extent.
I'd
They
agree totally.
they had the big budget, they had the big teams, and they were doing a lot in terms of driving the innovation. But yes, over the last 10 years, you see that the buy side has taken some of this mandate upon itself to push technology and to push innovations, and to basically participate, drive how they want things to be done. If they want electronification, they find that there's risk not getting involved in the space or to do stuff the manual way. then they will mandate it, and that's, they will bring dealers and everybody to that, to the platform that they like.
Yeah, was that stage, wasn't it, where you had the if you're looking for buy side technology, you'd be thinking of well, even at that sort of stage, Aladdin came in a little bit later, but Charles River or a Leighton Zero or what have you, and it was, that was all pre acquisitions and such like. But it feels like there's a lot of very good companies at the moment who are able to really personalize things and make it a better scenario for buy side firms. So I think it's a great time for it all. And as you said, look, you've been through 3 to 4 decades now of experience within the space. 30 years, you mentioned in the fixed income area. Talk to us about that sort of journey, technology wise, because we were talking about how security and cyber was something there on everyone's lips, which is still very much part of the conversation, right? But it's we've seen a rise in technology over the last 5 to 10 years that we've never seen, I don't think, at any sort of stage beforehand. And it creates a lot of opportunity, doesn't it?
It is, but it has made this building software a lot more complicated, to be very honest. Like building some 20 years ago was, you build a good software, you can install it. People are a lot more open to bringing in vendor software. But over the last 10, 15 years, as you mentioned yourself, there's a huge focus on data security. I think it started with, the cybersecurity attacks and so on. So there's a lot of focus on SOC 2 compliance and making sure that software that is introduced within the firm has all the right checks and balances, so that it is not bringing in a virus, for example, into the firm, and that not only is a firm being responsible, but even the vendors are being responsible in terms of when it comes to security. And then once that sort of went on, then there's this whole move towards moving stuff to the cloud, and that brought its own nuances, and compliance again got involved to make sure that if you're putting stuff on the cloud, that it is people are comfortable with it, that it's not available to the whole world, and it is the cloud security and how the data is secured, segregated on the cloud. That became a huge issue. And then obviously in the last 2 years, I would say this whole AI stuff, now that's become another new challenge. It's like, there's this whole concern that these AI tools can go into your data and look at your data and decipher information, and that somebody in your company just gives access to a database, and before you know it, your whole data is out there. So those type of concerns they're true concerns, and we fight with those issues on a regular basis. But yes, that's the landscape has changed. It is no longer build a system and install it and it's done. It's a lot more has to go around managing the DevOps, the security around the system.
Yeah, I think that's a really important aspect to look at, isn't it? Because there's a lot of excitement around what can happen, but also with it there comes a lot of governance that's required with it as well. And I feel like this is a time where there's a enormous amount of emperor's new clothes, and everyone's sort of rebadging their story to become an AI first business, etc. Without actually thinking, right, how are we actually going to utilize it here to move things further forward, and what is actually a proper use case that's coming together. I think we've seen a lot more of that over the last 6 months in particular. I think there was a lot of posturing over the 2 years before that, with everyone talking about where they want to go. I think there's an awful lot of people still who are trying to say, yeah, we need AI, but not 100% knowing what for, various different phases. But I think when you can work it properly into your offering, it becomes an absolute game changer in terms of what you can do and where you can take it, right?
Yes, absolutely. I think anybody who's out there who does not have a plan, a strategy around AI is going to be in trouble in a few years. It is a big game changer. I think it has to be used. Now, how you use it and how you harness it and control it and govern it, that's where the challenge lies. I think the companies that will really benefit will be able to create an environment where they have the guardrails necessary to make sure that it moves in the right direction and is used properly. Otherwise, it can be, the wild, wild west, in which case you'll have chaos in 3 years.
Yeah. I mean, this just shot me back about 15 years to a talk I went to go and watch, and it was Sir Benny Higgins in the UK talking. At the time, he was the CEO of Tesco Bank, I believe it was. And he said, look, it's no longer good enough to have a digital strategy. You need a strategy that's digital. And I think that probably comes together now. If you fast forward it and just bastardize it slightly, it's no longer good to have an AI strategy. You need a strategy that's AI driven. And I think that to me feels very relevant today as it did
Yeah.
15 years ago with digital as well.
Yes, it is. It's so this whole. I spend a lot of my time right now around this whole issue about developing our AI strategy, refining it, testing it, uh, and to make sure that it is we are in the correct place and using it appropriately for our
Absolutely.
benefit and our clients' benefit.
Definitely right. And this mortgage space that you're in isn't a what's the best way of putting it? It's not a standard market, is it? There's complexities around the mortgage world for obvious reasons, and volatility around it at the same sort of stage. Tell me what the health check of the space is like at the moment, where the excitement is.
So let me just first of all take a step back and explain to you what's so complex about this market, right? So
Please.
it's mortgage market. So in the R space, we call it the securitized products because we take bundles of loans and create a security out of it. So you take home mortgages and it's called your specified pools. You will take student loans or car loans, bundle those together, similar loans, and those are the asset-backed securities. You will take commercial loans, bundle those, and that's a CMBS. So all these different kinds of products have different underlying collateral beneath it, and but they're all effectively taken loans from individuals like you and me, and just bundling it together and then selling it to investors so that they have slightly a different risk profile, and this becomes a very valuable asset. But each, as you can imagine, each bond then becomes very unique because the risk of that bond is very dependent on the underlying loans. So that's why this has taken, it requires a lot of analytics, requires a lot of looking at the underlying loans sometimes, but it is our looking at similar packages that have been sold. So that's the complexity of our space, and that's why it has taken so long for this data to be this whole space to be digitized and become electronic.
Yeah, absolutely. Which then creates this enormous opportunity that when you can do it,
Yes,
there's a big improvement upside, right?
correct. So if you know what are the attributes, what are the things for each asset class that you need to share with the client to be able to distribute and to standardize, that's where the opportunity. You need to know these products well enough and then be able to open it up for the investors and the sellers, buyers and sellers, basically to be able to share that information in real time and to be able to exchange and trade in real time.
So again, a lot of opportunity around it. Tell us what that means for you and the business. So I'm fascinated again about this sort of third time founder, moving at pace. The business now sort of starting to gain some traction, etc. Where does it go? What's the plan? Where are you heading, Neil?
So, as I said, there are five different asset classes. We used one specified pools, which is one of those five asset classes, as our beachhead product. You
Yeah.
penetrate the market with that beachhead product. You try and get installed and get desk space, get installed and have the network built. This is the largest of the five areas in this market space. Obviously, the ones we are installed, we capture the desk space or the desktop space, then we will be able to expand into other areas, not just in the market space, but also potentially open up for other areas outside of the market space. So the whole market opens up for us.
This is going to be your biggest one yet, is it, Neil?
Yes, it is the most challenging, to be honest. Building a system or software for 5, 10, 15 sell side firms is in some ways easy. Building a platform that's going to be used by hundreds and hundreds of people and is a network platform is got its own challenges. So
Yeah.
yes, it is one of my more ambitious projects that I've taken on. But
That's it.
but we think we are positioned in the right place at the right time.
Well, you can see that you're energized by it, and the right place at the right time with the right people is probably a good triumvirate of things that come together to allow you to excel in that as well, right?
Absolutely. Having the right team, having the right technology, that's always key.
And so if you're sat there now with that position of having had, not your first rodeo, and learnt what you've done in businesses before, and you said, look, we won't talk about some of them on the other side as much as we will do the ones that have been successful, and a long career before that as well. Tell us some of the things that if you were to speak to a first-time founder who's going out there and building a business in this fintech space, what are some of the key things that you've learned to allow this business to be as successful as it is, getting the credibility it is, partnering with BlackRock and all of that sort of stuff? What lessons have you been able to pick up that's allowed you to be successful again now? What's the blueprint?
So sometimes I do speak to young entrepreneurs and I tell them that, guys, there are a lot of smart people out there. So you have to figure out what separates you from them. And having domain expertise is number one. If you don't have, just don't say that, trust me, I've tried it. If you think you can take on any space, you'll find that there are enough smart people who will humble you. So you need to make sure the area that you're in, you and your team are definitely domain experts. That's your moat. That's what will give you the time and gives you the edge over the others. Everything else in terms of hard work, in terms of making sure that the market size is fine, is large enough, and will be able to support your ambition and so on. To be honest, all those things are secondary. And if you have found a problem that needs to be solved, there'll be people who'll be willing to pay for it. So find a problem that really needs to be addressed. The money will come. You'll find a financial package or your pricing and so on that will work for the market, will work for you. And the main thing is find a problem that needs to be solved, and then solve it. And whatever you think, if things don't take you 1 year, it's going to take you actually 2 years. Just multiply that by 3. It always takes longer than you think. So
I'm very pleased you said that, because I think one of the strangulation points of businesses in this space is procurement. People sort of go in there and they've got the great idea and they're solving a problem that needs to be solved, but they forget about the runway that's necessary and how long it's going to take. I think everyone always underestimates just how easy it is for a large asset manager or a large hedge fund to suddenly onboard something. I mean, even worse on the sales side, which is a whole other story, right? But when you're talking about 18-month cycles to actually embed something sometimes into a business, that is a strangulation point of a company. And I think when you spoke 10 minutes or so about that sort of patience you've had to be doing it right over that sort of period, that to me feels really comfortable about what people should be thinking about and how they do it. And again, that's the sort of experience you bring to the table, right?
Yeah, so it is. You need to be patient. You need to, the rules of the game change before you know it. When we started out, AI was not even in anybody's mind. But more than that, it is the compliance and the regulatory environments keep changing. And if you think you can be, you're done, the product, you like it, your client likes it, wants to onboard you, it'll still take 1 year before it goes through all the checks and balances that the companies have to make sure that this your software is ready to be downloaded and installed and put on the on their desktop. So it's there are things that people don't realize, that it is some things are just not, you have to be patient, and you cannot control, you cannot accelerate some things.
Totally agree. So look, you are very clearly, with the pictures around your head there, a chess man, and speaking to a very good friend of mine who's a big chess player, he's talking about how many plays ahead. He's always playing about 5 or 6 moves ahead in his head about where he's going and where he wants it to map out. So if you're sat there now and thinking a few moves ahead in terms of BondXN and where you guys are heading, get us excited about what we can expect to see from the business over the course of the rest of 2026 and beyond.
So rest of 2026, I think if things go according to plan, we will see a lot faster adoption by our client base. We will start, hopefully towards the third quarter and the fourth quarter of this year, you will hear about some new verticals that we are going to get into. I'm not allowed to share that information with you.
Watch the space.
But the acceleration of our product line and our offerings will increase fairly rapidly from here on.
Very exciting. Well, I look forward to seeing it. If people, Neil, want to, have had their interest piqued by what we're talking about today, they want to get in touch and find out a little bit more about what you and the team are doing, what's the best way for them to reach you?
So first of all, just check us out on bondxn.com, our website. But otherwise, just send an email to sales or support at bondxn.com and somebody will get back to you.
Superb. Well, listen, I've loved the story. I was saying off camera beforehand that I'm heading out to New York in the not too distant future. So I'll make sure I look you up. It'll be great to meet in person. Thank you so much for sharing it today.
Drink with you.
Very excited about everything you're doing. We'll see you soon. And thank you all for watching. I hope you've enjoyed this episode of FinTech Focus TV as much as I have. Thanks a lot.